Hey everyone, welcome back to Corporate Decoder. Today, FFI just filed a Form 8K detailing a material definitive agreement, and I am seeing a move that is critically important for voting power. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing reveals an unusual issuance of preferred stock that significantly changes how proposals are voted on, and it is something every shareholder needs to understand. This is a filing from Faraday Future Intelligent Electric Incorporated, ticker symbol FFAI. On the 15th of April 2026, they entered into a purchase agreement with FFAI. What did they do? Well, they issued and sold one single share of a newly created series of preferred stock. This wasn't just any share, it came with a $100 price tag. This might sound small, but the real story is in how this series of preferred stock impacts voting. Before this, big decisions like increasing the number of authorized shares, known as the share authorization proposal, or a reverse stock split proposal, needed approval from a majority of common stock. Series C convertible preferred stock and Series B preferred stock. Now, here is the kicker. This single share of series of preferred stock comes with a whopping 10 billion votes. That's 1,000,000,000 votes. This series of preferred stockholder, FFAI, has agreed to vote his share proportionally to how the common stock votes on these key proposals. This means that even though he only owns one share of Series A, his vote proportionally aligned with common stock can effectively override the votes of many other shareholders if the common stock vote is split. The company also states that abstentions or non-votes by common stockholders will no longer have the same negative impact on these proposals, because the series of preferred stock vote will mirror the actual votes cast by common stockholders. This is a significant shift in corporate governance. It essentially centralizes a massive amount of voting power into the hands of the series of preferred stockholder for specific crucial proposals. What does this mean for regular investors? It means that even if you hold a substantial amount of common stock, your vote on these particular proposals might have less individual impact if the series of holders' vote, mirroring the common stock vote, becomes the deciding factor. This type of structure is often used to ensure certain proposals pass or to maintain control, but it can also dilute the influence of other shareholders. The filing also details that this series of preferred stock will be redeemed for $100. This redemption happens automatically once the stockholders approve both the share authorization proposal and the reverse stock split proposal, or if the board decides to redeem it earlier. This is a classic move to consolidate control and prepare for potential corporate actions that require specific shareholder approvals, like issuing more shares or a reverse stock split, which could be aimed at meeting stock exchange listing requirements or improving the stock price. Looking at the other details, this sale of series of preferred stock was considered an unregistered sale of equity securities. The company claims it was exempt from registration because the purchaser, FFAI, is an accredited investor under Section C of the Securities Act of 1996. This means the company did not have to go through the full registration process for this particular share issuance. So what is the big picture here? This filing isn't about immediate financial results, but about a fundamental change in the company's governance structure, specifically concerning voting power for investors in Faraday Future Intelligent Electric Incorporated. This is a crucial detail. The concentration of voting power for key proposals in the hands of the series, a preferred stockholder, is a factor to watch. Historically, companies that have made such moves often do so to facilitate significant corporate actions like mergers, acquisitions, or financial restructurings. The fact that they are preparing for a share authorization proposal and a reverse stock split proposal suggests they might be looking to raise capital or meet exchange requirements. For example, when a company like Elsid last year faced potential delisting from Nasdaq due to its stock price falling below $1, they implemented a 1-for-30 reverse stock split to boost their share price. Holders of a $1,000 position in LCIZ prior to that split would have seen their holding become worth around $33, but the stock continued to decline significantly afterward. Investors in FFI should be aware of the potential for dilutive offerings or other share structure changes that might follow these upcoming proposals. The real risk I am watching is how this concentrated voting power will be used in future shareholder decisions and whether it aligns with the interests of minority common stockholders. What I'm actually looking for is transparency and fairness in how these proposals are presented and voted upon. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.